One of the fastest growing companies in the world, which had managed to gain more than 1 million users in the span of less than 3 years in an emerging industry, becoming the third largest of its kind. A company that had been evaluated at $32 billion and which has been raising funds from some of the biggest financial groups in the world, counting names such as Sequoia and BlackRock. A company which had grown so fast that in just under 3 years you could see their name on Miami Heat's basketball stadium and on the current uniform of Lewis Hamilton. All of these and even more aggregated under an empire run by a 30-year-old guy from Stanford, California that not many people had heard of. But how did a crypto child prodigy who had been making a name for himself while trying to remain behind the curtain go from one of the fastest growing billionaires in the world, topping Forbes list and running an actual crypto empire, to the protagonist of one of the most drastic financial falls in modern history, seeing his net worth drop by more than 94% in a single day on the 8th of November, going from more than $10 billion to $990 million, making it, according to the Bloomberg Billionaires Index, the largest one-day drop in history. The spotlight has drastically turned against the kid who was supposed to bring crypto into the mainstream, turning him from an innovator into a villain in one of the fastest shifts we have ever seen. Sam Bankman Fried, the crypto savior, became the face that no one wants to be associated with, all in less than 1 day. So how could that happen? Sam Bankman Fried was born in 1992 on the literal campus of Stanford University in a family of academics. Both his parents were professors at Stanford's law school, so even since his early life, people could tell that little Sam was destined for success. After attending an upper middle class high school in California, he went on to graduate from MIT with a degree in physics and a minor in mathematics, showing that Bankman Fried was on the path to greatness and nothing could stop him. How come that this promising young man went from an MIT graduate, the son of 2 highly respected professors at one of the most prestigious institutions in the country, to the black swan of the crypto industry? It all started in 2017 with Sam's first endeavor into the business world. After spending 4 years at Jane Street Capital, Fried moved to Berkeley, where he worked as the director of development for the Center of Effective Altruism for only 1 month, and what he did next was what seemed like the first step to greatness, but was actually the first in a chain of events that led to the most massive fall in business history. In November 2017, he founded Alameda Research, a quantitative trading firm, along with Sarah McCauley from the Center of Effective Altruism. Alameda Research was a quantitative trading firm highly involved in the DeFi sector of the crypto market. During its 5 years of existence preceding the FTX crash, Alameda had invested in more than 185 projects, being one of the most prominent capital sources in the crypto industry. However, the company was no angel, and the means of growth employed by Bankman Fried were sometimes not a definition of best practices. He focused on arbitrage techniques for rapid growth, looking at the Asian Bitcoin market and trying to exploit price discrepancies between those and that in the United States. One opportunity he exploited was what is known as the KIMCHI premium. While Bitcoin was pricing at around $10,000 in the US, it traded for $15,000 on Korean exchanges. This was because of a huge demand for Bitcoin in Korea, Bankman Fried said. Around its peak, there was a fast spread of around 50%, he said. However, because the Korean won is a regulated currency, it was difficult to scale this arbitrage. Bankman Fried then sought a similar opportunity in other markets, which he found in Japan. After buying Bitcoin for $10,000 in the US, investors could send it to a Japanese exchange. There, they could sell it for $11,500 worth of Japanese yen. At that point, they could convert the amount back to dollars. This strategy earned the company about $20 million. Alameda continued to grow, however, based on other investments as well, such as those in the DeFi sector, and Bankman Fried became a self-made billionaire before hitting the age of 30. But in 2019, he made the very decision that was to turn fatal for the young crypto king. In May 2019, Bankman Fried launched his new project, FTX. The name, an abbreviation standing for Futures Exchange, describes the initial intentions of the company pretty neatly. FTX was intended to be a crypto exchange platform where users could trade cryptocurrencies or digital currencies for other assets, such as conventional fiat money or other digital currencies. The exchange started gaining popularity, growing at an insane pace and gaining ground on competitors such as Binance and Coinbase, with Changpeng Zhao, the CEO of Binance, buying a 20% stake in FTX just half a year after the company's founding. In August 2020, FTX acquired Blockfolio, a cryptocurrency portfolio tracking app, for $150 million, and in July 2021, the company raised $900 million at an $18 billion valuation from over 60 investors, including SoftBank, Sequoia Capital, and other firms. After moving its headquarters from Hong Kong to the Bahamas in late 2021, the company hosted a new series of funding in January 2022 where it was evaluated at $32 billion. Things were looking as promising as ever for Sam Bankman Fried and his companies until September 2022 came around. Bloomberg reported in September 2022 on the close relationship between Alameda Research and FTX, the two companies owned by Sam Bankman Fried. Bloomberg noted that Alameda had functioned as a market maker on FTX early in the exchange's history and that the trading firm remained in June and July 2022 the biggest known depositor of stablecoins on FTX. Bloomberg further stated that the regulatory oversight which applies to companies operating in the traditional equities markets would have prohibited the relationship between the two firms if it was applicable. Alameda's trading on FTX meant the trading firm was occasionally in a position to gain financially when others lost money on the exchange. Bankman Fried at points defended Alameda's use of FTX as it created liquidity. Several months later though, on the 2nd of November 2022, CoinDesk reported that a significant portion of Alameda Research's assets were held in FTT, the exchange token issued by FTX. It said that there were $5.1 billion worth of FTT tokens in circulation, and that Alameda's balance sheet held $3.66 billion of unlocked FTT, $2.16 billion of FTT collateral, and $292 million of locked FTT. Several days after the publication of the CoinDesk article, on the 7th of November, Binance CEO Changpeng Zhao said on Twitter that his firm intended to sell all its holdings of FTT. Binance had received FTT from FTX in 2021 during a transaction in which FTX bought back Binance's equity stake in FTX. Zhao cited recent revelations that came to light as the motivation for selling FTT. Bloomberg and TechCrunch reported that any sale by Binance would likely have an outsized impact on FTT's price given the token's low trading volume. The announcement by Zhao of the pending sale and disputes between Zhao and Bankman Fried on Twitter led to a decline in the price of FTT and other cryptocurrencies, resulting in a 3-day bank run of an estimated $6 billion that sent FTX into crisis. On the 8th of November, Zhao announced Binance had entered into a non-binding agreement to purchase FTX due to what he referred to as a liquidity crisis at FTX. The deal, however, did not include the sale of FTX.US, the United States-specific version of FTX's exchange. Zhao announced on Twitter that the company would complete due diligence soon, adding that all crypto exchanges should avoid using tokens as collateral. He also wrote that he expected FTT to be highly volatile in the coming days as things develop. On the day of that announcement, FTT lost 80% of its value. On the 9th of November, Bloomberg called the acquisition of FTX by Binance unlikely due to the poor state of FTX's finances. Bloomberg also reported that the United States Securities and Exchange Commission and Commodity Futures Trading Commission were investigating the nature of FTX's connections to Bankman Fried's other holdings and its handling of client funds. Later that day, the Wall Street Journal reported that Binance would not move forward with a deal to acquire FTX. Binance cited FTX's reported mishandling of customer funds and pending investigations of FTX as the reasons for not pursuing the deal. At this point, everything was falling apart in Sam's empire, and despite his best efforts to hold everything together, it was all in vain. On the 9th of November, FTX's website announced that it was not processing withdrawals at the time. Bankman Fried said that although the firm's assets were worth more than his clients' deposits, it would need funds from outside to meet demand for withdrawals due to a lack of liquidity. He also claimed that FTX.US, as a separate company, was not currently impacted by the crisis. Things were already looking really bad, but the next day would bring an even more drastic conclusion to FTX's fate. On the 10th of November, Axios reported that FTX approached Kraken, another crypto exchange, for a potential rescue deal. Bankman Fried made several statements taking responsibility for FTX's failure and indicating that FTX was still seeking capital to remain solvent. He also announced that Alameda Research would cease trading and end operations. FTX's in-house legal and compliance teams had, for the most part, resigned by this time. The last straw, though, came when anonymous sources cited by the Wall Street Journal said that Alameda Research owed FTX $10 billion as FTX had led funds placed on the exchange for trading to Alameda so that Alameda could make investments with the money. On the 12th of November, anonymous sources cited by the Wall Street Journal said Alameda CEO Caroline Ellison disclosed to other Alameda employees that she, Bankman Fried, Gary Wong, and Nishad Singh knew that client deposits were transferred from FTX to Alameda. The funds were mostly used to pay back loans Alameda had taken to make investments. Though Bankman Fried said that FTX.US customers did not have a reason to worry on Twitter on the 10th of November, employees began attempting to sell assets belonging to the firm on the same day. These assets include stock clearing company Embed Financial Technologies and the naming rights to the FTX arena. Also on the 10th of November, the team running the FTX Future Fund, a charitable group bankrolled by Bankman Fried, announced that they had resigned earlier that day. Future Fund had committed $160 million in charitable grants and investments by the 1st of September of this year. FTX was officially done with, and there was no going back. On the 11th of November, FTX, FTX.US, Alameda Research, and more than 100 affiliates filed for bankruptcy. Anonymous sources cited by the New York Times said that the exchange owes as much as $8 billion. The crypto lender BlockFi, which was affiliated with FTX, announced on the 10th of November that it was suspending operations as a result of FTX's collapse. Bankman Fried resigned as CEO. His empire had been destroyed. FTX's story is a tale of goods and bads from which businesses can learn a lot. Bankman Fried's involvement into politics, his lobbying and donations for the presidential campaign are just a couple of other endeavors that had surfaced since FTX's collapse that authorities are investigating right now. Although FTX's future is unclear at the moment and many allegations are circulating on Bankman Fried's current whereabouts, one thing is for certain. The boy crypto king has dropped his crown, and bending over to pick it up just won't do it this time. Until the crypto industry finally finds another figure to step up as its spokesperson, it could take a little bit of time, and when it finally happens, whoever it will be should really learn from his predecessor's mistakes and avoid falling from grace in such a sad, dramatic manner as well.